This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Delays in oil product deliveries due to ships being diverted avoid attacks in the Red Sea are impacting product markets in Europe in particular, an International Energy Agency executive said on Wednesday. We're currently seeing a difficult situation with respect to the Red Sea and the Suez Canal, Keisuke Sadamori, IEA's Director of Energy Markets and Security, told Reuters on the sidelines of the India Energy Week at Goa, adding that there has been delays in various deliveries of oil products. The Iran-aligned Houthis have been targeting commercial vessels with drones and missiles in the Red Sea since mid-November, in what they describe as acts of solidarity with Palestinians against Israel in the Gaza war.
India is expected to be the largest driver of global oil demand growth between 2023 and 2030, narrowly taking the lead from top importer China, the International Energy Agency, IEA, said on Wednesday. The world's third largest oil importer and consumer is on track to post an oil demand increase of almost 1.2 million barrels per day, BPD, between 2023 and 2030, accounting for more than one-third of the projected 3.2 million barrels of oil per day of global increases in the period, the IEA said in a report released at the India Energy Week in Goa. The agency forecast India's demand would reach 6.6 million barrels of oil per day in 2030, up from 5.5 million barrels of oil per day in 2023.
Moving on to the top news in the energy sector.
U.S. crude stocks rose as oil refiners took in less oil, following extreme cold weather that knocked out utilization last month, the Energy Information Administration said on Wednesday. Crude inventories rose by 5.5 million barrels to 427.4 million barrels in the week ended February 2, the AS said, compared with analysts' expectations in a Reuters poll for a 1.9 million barrel rise. Crude stocks at the Cushing, Oklahoma, delivery hub fell by 33,000 barrels in the week, the EIA said. Oil prices rose immediately following the data despite the crude stockpile build. Brent and U.S. crude futures edged higher to $78.80 a barrel and $73.50 a barrel, respectively.
Oil extended gains on Thursday after Israel rejected a ceasefire offer from Hamas, while a weaker dollar also supported prices. Brent crude futures rose 30 cents, or 0.4%, at $79.51 a barrel at 0400 GMT. U.S. West Texas Intermediate crude futures climbed 26 cents, or 0.4% to $74.12 a barrel. Wider Middle East tensions have kept the market on edge since October, with limited progress in talks to end the Gaza conflict. Israeli Prime Minister Benjamin Netanyahu rejected Hamas' latest offer for a ceasefire and return of hostages held in the Gaza Strip, but U.S. Secretary of State Antony Blinken said there was still room for negotiation toward an agreement. Next, we have the top news in metal markets. Iron ore futures in China climbed to near a one-week high on Thursday, on hope of better demand from the property market as China signaled some support to the struggling sector. The most traded May iron ore on China's Dalian commodity exchange advanced 1.7% to 957 yuan per metric ton at the midday break. Earlier in the session, it hit 964 yuan and 50 fen, the highest since February 2. The most active March iron ore contract on the Singapore exchange climbed 2% to $127.50 a ton, as of 0334 GMT. China aims to ramp up financing for home projects in the coming days as part of its support measures. Construction accounts for a majority of steel and iron ore demand.
Gold prices steadied on Thursday as a pushback from U.S. Federal Reserve officials on market hopes for early interest rate cuts offset safe haven demand after Israel rejected a ceasefire offer from Hamas amid continuous talks to end the Gaza conflict. Spot gold held its ground at $2,033.56 per ounce, as of 0427 GMT. U.S. gold futures edged 0.1% lower to $2,049 per ounce. On one hand, there remain enough geopolitical concerns to keep safe haven buying on the agenda, which is limiting gold's downside, said Tim Waterer, chief market analyst at KCM Trade, adding, but on the other hand, delays over timings on potential rate cuts are acting as a cap to gold's immediate upside potential.
We will now look at the top news in the agricultural sector.
Argentina's main farmland will receive significant rainfall over the next few days, the Buenos Aires Grains Exchange announced on Wednesday, adding this should boost the country's current soybean and corn crops. In recent weeks, Argentina's top agricultural areas have experienced mostly dry conditions and high temperatures during the southern hemisphere summer. The South American farming powerhouse is a top global supplier of processed soybeans, corn and wheat, and proceeds from the key cash crops are a major source of hard currency for the central bank's depleted foreign reserves. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.